Good evening, everyone. This is Wayne, and this is the video version of the trade report for Monday, April 9th, 2018. Well, it looked as if the Bulls might go home with a big W today, but the Bears came on strong in the final stages of the market and really took the wind out of the Bulls' sails. Stay tuned to find out more. Greetings, everyone, and thank you once again for spending part of your day with me as we go over the events and the price action in the financial markets. Today was today was a storm bringer. Let's call it that. We had a market that really looked like it was going to favor the bulls, and it was going to just be an answer for Friday's down move. It looked like an acquiescent bear day. We were just gonna fly to the upside and stay there. But after that huge move to the upside that just absolutely took Friday's down move and said whatever, we all of a sudden began to tip over a little bit, and a little push to the upside in an attempt maybe to balance the scales. I was looking at the developing point of control here, thinking maybe price would have a chance to just kind of hover within about a 10-point trading range here. But then as soon as the sellers got a hold of the market, it was just it was a waterfall of selling that took place. You can see how um, volume picked up, and it just didn't quit. We just continued down. We found the low of the day and went even lower. So I mean, this was pretty serious. Um, we closed lower on the day, so we've got a market that is a little bit haunted, I guess. And it is not sure. It's almost like it's scared of itself. Let's put it that way. An up move is met with a down move. A down move is met with an up move. It's not directionless, but it's kind of direction intense. And I mean, it really doesn't have any kind of balance associated with it. The VIX went higher today. And the interesting thing about the VIX is even when the market, well, when the S&P futures were up over 40 points, the VIX was only down 1 point. And I did a couple of midday videos that I posted on Facebook. So if you have a chance, you can watch those and then use this video as kind of a capper for the day. But I think I'm just kind of looking at the day. Well, you can take a look at the videos and decide for yourself, um, how it all played out. I did it kind of a piecemeal. As the market was moving up, I just felt like it was important to do a video, and when the market started moving down, I felt like it was important to do a video. I wanted to make sure I was sharing information with all of you, and providing you with some relatively detailed information as best I could as it related to what I was looking at. Um, through the lens of the technical indicators I use, my sense of the market, and just an overall perspective of what it was I was looking for. So, in the great scheme of things, I was not looking for or even expecting this day. A big wow to the upside and a big wow to the downside. And the one comment I did make in the trading room today was we are now doing this thing, which is basically a reverse of this thing, which were known as V bottoms over the last few years. The market would sell off and then it would just get bought right back up again. Well, now it's getting bought up and it's getting sold back down again. So we're kind of entering an entirely new paradigm as it relates to the market energy. This market is insistent upon remaining lower. And a market that is insistent on remaining lower oftentimes will go lower. So we have a market here that is beginning to show its love and lust for the downside. And even though we have been trading in a basically a trading range, it's been one heck of a wide trading range. Let me just throw I'm going to throw the S&P. This is the VIX right here, the 15-minute. but I do want to throw the daily chart of the S&P futures up here, and we can take a look at that real quick. Um, so as I was doing my analysis over the weekend, obviously I'm looking at, we've got this move, we've got this move, we got this smaller move. Then we had kind of this lazy, lingering kind of sideways to downward move. Then we had a big wham. And besides this move down here, which was significant, make no mistake about it, we've really just been trading in this sideways range. Now, that's a big range. We're talking about 2665 to about 2580. So it's about an 80-point range. I mean, that's a pretty decent range. 80 points of S&P futures equates to 800 points of Dow points. So, I mean, that's a wide range. The key right now, technically speaking, is this 200 period moving average. Can the market remain above it? Now, you can see it's gone down once, twice, 3 times, 4 times, and it might go down again. The main thing about the 200 period moving average is it is in an upward trajectory. It's still going higher. It still has a lower left to upper right trajectory associated with it. So that's 1 point for the bulls. When this thing begins to go like this, basically flat, and then ultimately it will if it doesn't, if the market doesn't start going higher, it'll start drooping. That's when things begin to look and feel and get very, very difficult for the bulls. That means our market is basically tipping over. So I'm watching for that, but so far so good. We still have a fairly decent angle to the upside for the 200 period moving average. But if we move down below the 200 period moving average definitively, that's when we will have some issues. And if we stay below, then the 200 period moving average will really start to tip over. So at this point, we're maintaining a level of volatility as measured by the VIX in about the 20 to 21 point range. That's pretty high to be consistently at that level. So since I did bring that up, let me go ahead and bring the VIX up. Where is that? Did I just bring it? Nope, that's the VXX. Let's do the VIX. Okay, daily version, daily chart of the VIX. So we have the VIX that closed higher today. You can see that it tried to go lower, and as well it should, with a huge move to the upside. The Dow at one point was up 450 points, and the Dow closed up only 46 points today. And real quick, let's just go over the rest of the markets. I mentioned earlier that the markets actually closed lower. I apologize. They did not close lower. I was paying so close attention to price action today. I really wasn't looking at the averages as it related to their closing prices. So I'll educate myself while I impart this to you as well. Okay, Dow closed higher, 46 points. The S&P closed 8.5 points higher. The Russell closed up 1.1 points higher. And the NASDAQ closed up 35 points. NASDAQ really took the market up early in the day. It was the index that I think kind of lit a fire under the market and ultimately got everybody else to follow it. However, it began to really dip, and there were a few things that ended the day that caused an additional collapse. We'll get to that. But the VIX is holding very steady, which is a very inconclusive kind of arena for it to be in. We did end the day, okay, we ended the day higher, as I just discovered, but the VIX ended the day higher. And throughout the day, when the broader market was significantly higher, the VIX wasn't down that much. So that is telling me that the VIX is preparing for additional downside action in the market. And it's moving up. We're still in a sideways range for the VIX, but today's action kind of puts an entirely new twist on volatility. So I'm looking for more downside tomorrow, folks. This market really really took a hit today. And it may not recover very quickly from it. You know, when you get a move so incredibly big to the upside and you lose virtually all of it in the same session, that's a real that's a real blow to the buyers. The bulls really are dizzied by that move. So we're looking at a market that's, you know, trying to get itself balanced, trying to get itself kind of you know, get its equilibrium back a little bit. And I'm not seeing that happening anytime in the near future. So we're sitting here kind of wondering, waiting, watching, and you know, all I can do is say at this point, the Bears have the upper hand at this point. And I am looking for some downside tomorrow. Now, you know, that's my bias right now. That's my thesis at this point. And I mean, the markets just really aren't in a very happy state at this moment. So the thing that happened today toward the end of the day, but the market started selling before then. If you've already heard this, then you know, so be it. But I guess the FBI raided Trump's lawyer's condo in Trump Tower, his attorney Cohen, and they apparently found, you know, some rather damning documentation on a few different subjects that have been under investigation. That's not something the market wants to see or hear. So whatever comes from that investigation remains to be seen, but that's just one of those things that doesn't bode well for the markets. So enough said about that. We are entering earnings season. Earnings season is typically a very positive time for the markets. I've talked about that. The focus is on earnings. It's, you know, it's a very exciting time. Analysts come out and they start talking about price targets and valuations and you know, issuing buy and sell signals and the like. We've talked about that. But with these new market conditions, it remains to be seen how earnings will actually affect the market. Will they be a positive stimulus? Will they provide the necessary catalyst for the market to go higher? At this point, the jury is really out. And right now, speaking of the 200-day moving average, you can see in the VIX here, it is starting to go higher. It's just had this very subtle upside trajectory, but it's becoming more and more so. So we've got volatility that really is paying attention to the market and is suggesting that this market has some more downside in it. So as we peruse and consider those dynamics, I do want to show you Amazon. Amazon had a kind of a rough day. It closed in the green, but only by 85 cents. It was up over $30 at one time. So you can see where it was, you know, quite high and then it came down. This is not a incredibly serious bit of price action to the downside for Amazon, but it's also not that positive. So we're still kind of in limbo as far as whether or not Amazon is going to be able to get some traction and go higher, you know, really get its earnings run going. And for now, I mean, I was in Amazon and I exited my trade right at the beginning of the day. I just did not like the pre-market price action, and I was not a believer that this market was going to go higher, although it did. But as the market went higher, it was fascinating. Let me show you a 15-minute chart real quick of Amazon. I was kind of surprised, I guess, for lack of a better way of describing it. But as the market went higher, we had an initial move up in Amazon, But then it just kind of began doing this sideways, and then all of a sudden it just dropped. It's just horrible price action in Amazon today. So not a very good performance today out of Amazon. The one stock that did have in my opinion, the best performance of the day, although it completely lost most everything that it gained during the day, was Netflix. Netflix was up over $10 at one point, and I mean that's a big move for a just under $300 stock. I mean that's an over 3% move, and by the end of the day, um, Netflix only ended up about $1. So everything it had gained just came crashing back down again. Still ended up in the green, but very, very tenuous. And you can see how it came up here, hit the 618, and just kind of bounced right back off again. Now that's the third time it's done that. You can see where it's done it the last three sessions: 618, 618, 618. So 618 has been a significant resistance level. So, what does that mean? Well, it means that Netflix is going to have to do a whole lot more work to get going higher, or else it's going to end up doing just the opposite. Typically, when markets are rejected at certain price levels, they they like to move down in order to get a good head start to try to go back up again. So Netflix's earnings are coming out next Monday after the close. So we have 5 more trading sessions before Netflix's earnings come out. And they are basically the first big earnings report that we have in the tech sector. And there's a lot hinging on whether or not the market is going to uh, respond favorably to the rest of the earnings season, predicated on what Netflix reports. And Netflix will be a proxy for technology stocks, at least for the period of time immediately following their earnings release. So anyway, a lot of things in flux, a lot of things that are just still in the have not yet to be determined category. Let's put it that way. Tesla, we're going to look at Tesla again. I showed Tesla last week, said it might possibly be a good spec trade, and it kind of gave up the ghost. Um, did not even try to get back up to the 200 period moving average. And this is why I called it a spec trade. It looked like it wanted to go higher, and it had a couple of really decent sessions, but then it pulled back on Friday, and it pulled back even further today. So right now it's a no trade. And I don't really trade Tesla anyway, but when I see a stock that makes a big move, I want to take a look at it and see if there's anything there. And the initial look at Tesla made it appear as if there might be a little bit more juice in it. But I mean, you can see where on Friday it did go a little bit higher from its open, but then it came right back down again. Same thing today, went higher, came back down again. So when a stock goes up twice, gets pulled back from its high, that usually means that it's pretty much kind of shot its wad, so to speak, and it's not really going to gather its resources and pull itself up by its bootstraps. So let's see what else looked good today. The chip sector was upgraded by a firm called Evercore ISI, and there's an analyst who works for them. It's actually a technical analyst who works for them named Rich Ross, who I don't know. I think he's the best technical analyst I've ever seen. He wasn't the one who made this announcement, but the firm Evercore ISI basically upgraded the entire chip sector today. Well, Nvidia was up about $7 or $8 earlier, and it closed up only about $1. Micron Technology was up over $1. It closed down 50 cents. Lam Research was up, I think, around $7 or $8. It closed up about $2.50. So, and then Intel was up about $1.50, and it closed up 76 cents. So, and then another big mover was Microsoft. Mind-boggling move in Microsoft today, up $2.50, ended the day up only 54 cents. So, these are this is crazy. I mean, this is a huge move up for Microsoft. Again, 618, same thing as Netflix. Wham, got rejected. Wham, got rejected. And this market is not very forgiving. It is not going to give anyone a break. Now we got the 200-day moving average moving up at a relatively decent angle. Microsoft has never really even come close to the 200 period moving average. And it's one of the stronger stocks, actually. So I do like Microsoft, but I'm in the camp right now where I think we could start getting serious about moving lower. And I am not in a position at this juncture where I'm I'm trading the market to the downside, but I'm looking for some confirmation that my thesis is is accurate, and then I may begin taking some short positions. I, for whatever reason, I'm not, there's no way for me to logically or logistically explain what I'm about to say, but I make my energetic connection to the market. It's like eh, there's an intuitive dynamic that exists, for every trader as it relates to how they engage the market. My connection to the market, my engagement piece with the market is telling me that this market has a bias to the downside, and it there's something it needs to finish. There's some unfinished business here. Call it the February lows if you will, but I think it's more than that. I think this market has gone up so far in such a long over such a long period of time. It's just it needs to kind of fill in the space that exists that it overlooked filling in over the last few years. We haven't had any appreciable pullbacks. So, here we are. We're in a very volatile period of time, one of the most volatile periods of time ever in market history. And this market is, acting out. And it's important not to get caught up in the riptide that is this market. Being in cash right now is the smartest thing that anyone could do. Or if you understand how to position yourself and hedge your positions and know that hedges, for all intents and purposes, are insurance, and that insurance comes with a premium, and you are still able to bring yourself income or capital appreciation with your positions that you have, and protect them via the hedges, then you're well tooled to be able to engage the market. And if you don't understand how to do that, and it does require some rather elaborate and advanced types of options trading structures, then realistically, you should be on the sidelines now. Any portfolio that is still active in this environment is, in my opinion, at somewhat significant risk. My 2 cents. So I'm not trying to impose or infuse fear, but a market that goes up almost 500 points in a day and comes down almost 500 points in that same day, there's something unhinged. So I just feel it's my duty to make sure that I'm issuing a caution, providing some information that I hope can bring some assistance and um, some understanding of what can possibly be done to protect yourself from what I think is coming, and it's a pretty good sized down move. So, the part of me hopes I'm wrong, but the other part of me is looking at this market and saying, there's something going on here, and it isn't an up move. So, at any rate, we've got a market that is under pressure. We've got a market that has been under duress for a couple of months now. We're actually going on we're past the second month now of high volatility and price action that is, a little bit dizzying. So, what will tomorrow bring? Well, again, I've got I've got my thesis set for some more downside action. So let's take a look and see what the market's doing. It's trying to recover a little bit in the extended session here, but it's very difficult to say that anything meaningful is going on here. You know, after this move here, and in the final 15, we had a fairly decent move up, but now we're just kind of straddling beneath the value area. So we'll see. It's impossible to know what's going to happen tomorrow. And obviously, it's impossible to know what's going to happen in the regular session tomorrow based on what happens in the extended session tonight. That's become more and more the rule than the exception. The extended session has virtually no bearing on what happens in the regular session, it seems. So, you know, we'll see what happens. So, anyway, enough of me going on. And I think that probably about wraps it up. So, with that, I would like to ask you to please trade safe. Trade what you see if you choose to trade. And good night, good trading. And remember, cash is king, discipline is queen. Good night.